future of crypto not here anymore? In fact, is it going across the pond? Andreessen Horowitz is opening up its first international office in London to be the home base for its new crypto accelerator program. The VC firm's move comes after Coinbase and Binance were both slapped with lawsuits from the Securities and Exchange Commission that claims the companies violated the law by, among other things, operating as securities exchanges without registering their businesses with the SEC. SEC Chair Gary Gensler excoriated the crypto industry at the Piper Sandler Global Exchange and FinTech conference last week, saying, quote, "We've seen this story before. It's reminiscent of what we had in the 1920s before the federal securities laws were put in place. Hucksters, fraudsters, scam artists, Ponzi schemes. The public left in line at the bankruptcy court." So what does one of crypto's biggest bulls think of SEC Chair Gensler's outcries? Here in a Fox Business exclusive, billionaire venture capital royalty Draper Associates founder Tim Draper. Hucksters, scam artists. I mean, it's like that scene in Woody Allen's Bananas where the cop gets up on onto the witness stand and says, he's a New York commie intellectual bad apple, but I don't want to cast no aspersions or nothing. What do you make of his comments here?
You know, weak regulators spread fear, and strong regulators spread opportunity. And I think we've got a real problem because the SEC has been spreading fear, and all of the innovators are leaving the country. And there's a huge problem we have. This regulation by enforcement makes no sense. We want the great technologies to stay in the U.S. And they're all going to Dubai and Singapore and Northern Europe and South America and all over the world. And that they're all saying, oh, it's all about the Howey test. The Howey test was 80 years ago, and it has no relevance to crypto. I think crypto needs to be regulated in a new way from a new group. And I mean, what's America going to look like in 40 years? It's going to be a total wasteland of there's going to be no technology. Look, crypto is coming. AI is coming. What is this spreading fear about these new technologies? They're great for us. I mean, new technologies. We got smartphones. We got Teslas. We got all these amazing new technologies. We have the internet. All these things happened because the regulators had a light touch.
Well, can I just say, Tim, that if I were channeling Gary Gensler, he would say, my job is to protect investors, and already some investors have been left holding the bag. For example, some who are still waiting on getting remunerated.
Lots of questions this morning for you about what is happening. And so let's just start with, what do you know and what are you investigating?
Andrew, as you can imagine, and your viewers know that I can't speak about any possible investigations, but let's step back and say what's happening here. And it's really as old as finance and as antiquity. When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside, these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then when markets turned on them, it appears that a lot of customers lost money. And that's where our mission is about those customers.
Well, let's talk about that, Gary, because critics would say, look, you have been talking about the need for regulating, and yet have not. There's been lots of focus. We had you on last time when you went after Kim Kardashian But on a relative basis, going after Kim Kardashian compared to what is now a massive undoing of FTX isn't enough. What do you say about that?
Nice, Tisha Phone. Welcome back to US Business News, American Journal, American TV News. I've changed the name. Folks, go ahead and hit that free like and that free subscribe button. That way you'll get the latest breaking news. You probably remember me from Fox News or Newsmax, but I've been on TV quite some time. Now I'm doing YouTube. So you heard two segments, Fox News and CNBC. Gary Gensler. Gary Gensler is the SEC. Whatever he says, we freeze and we listen up because he could affect our Bitcoin, our crypto, and just anything money. Mr. Gensler has a lot of power in the United States. This moment in time, things can change if we change our President of the United States. So go ahead, Gary Gensler. Go ahead and enjoy your power. Power can stop anytime. So what did Fox News say that was very alarming, and what did CNN, NBC say that was very alarming? Well, Fox News is saying that Mr. Gensler, which we agree with, is stifling the economic. What's going on is that Americans are trying to mine Bitcoin. We're trying to do the crypto, the XRP. We had Banaka here that had a bunch of cryptocurrency. We have Coinbase here, which I use. A lot of moms use. A lot of 47-year-old suburban moms in the United States own cryptocurrencies because they're looking for a future, because the US dollar, they owe 32 trillion. So we're all running from the dying dollar, and we went over to digital assets, which is cryptocurrency. And some of us have a YouTube channel, some of us have a TikTok shop, some of us have Amazon, Facebook, Shopify. But with the crypto, we went over to it, and now Gary Gensler caught up to us, and he grabbed Banaka and sued them, and he grabbed Coinbase and he sued them, and he shaked out all the US citizens and residents in Banaka and took that, and Banaka left. But Coinbase stood back, and they're fighting. They're like, we're not leaving, and I do not blame them. XRP fought the SEC, and they won, all right? Mr. Gensler looked at some of the 23,000. There are about 23,000 cryptocurrencies this moment in time. Gary Gensler looked at some of them, not all of them. He looked at the bad ones, and he said, look, there's a bad one, so we're going to sue the bad and the good ones. Like I tell everybody, welcome the lawsuit, because not all cryptocurrencies are going to be shaken out. I've been doing security law for 18 years in the United States. You've got to welcome this. And we know Dodd-Frank is a total mess. We know that it slows down and it hurt the housing market. In fact, it made a lot of people rich because they got in with 10% down. And people who had 0 or 5% didn't get to play because the government said you can't play unless you have 10% minimum to play. So anytime government comes in, they stifle creativity. Now what both Fox Business and CNBC is saying is that if Mr. Gensler come down on crypto, aren't we going to just get stifled and other people are going to get it? And that's the truth. China is ahead of us in the tech because there's too much regulation in the United States. We can't regulate and over-regulate, Mr. Gensler. If we do, other countries are going to beat us in the tech business. We don't have time for countries to be beating us, Mr. Gensler. We want to be number one in terms of the technology. So the SEC is spreading fear among the tech and the crypto. They're talking about AI, they're talking about the crypto, and according to Fox Business, cryptocurrencies are just going to Dubai, Singapore, and the Huawei test, the one that Mr. Gensler is relying upon, it's old, and it was never designed for crypto, it's never designed for technology. So don't tell me you're going to use some old test to determine a new way of how we do currencies. Do you understand Bitcoin? The SEC cannot regulate the cryptocurrency. It's just not possible because cryptocurrencies are not even securities. All crypto, Mr. Gary Gensler, cannot be security. So you cannot regulate all of them because they all have a different characteristic. Why do I say that cryptocurrency is different from money? If you have Bitcoin, you can do three things with Bitcoin, and you can't do that three things with stock. First of all, I cannot feel or see a stock. I can get a certificate for a stock, okay? So that's number one. I don't get a certificate for Bitcoin. Bitcoin is a digital. It's just on the internet. But I can buy and sell with Bitcoin. I just need my virtual wallet. I do not have a virtual wallet for stocks, Mr. Gensler. There is no virtual wallet. When I sell a stock, I have to wait 3 days for it to clear, and then the money comes to me. I just sell Bitcoin within 5 seconds. I'm doing business. So Bitcoin can be used to buy and sell. It can be used for passive income. It can also be used to pay your bills. You cannot use your stocks to pay bills unless you liquidate it. So a stock and crypto are two different characteristics. Crypto is very different. People said, oh, but I can see Amazon, even though Amazon is not a brick and mortar, I can see Amazon effects on the stock. Bitcoin is just a currency that's used on the internet because it needs a digital wallet. So that's the biggest difference. I can use Bitcoin to buy and sell. I can use it to buy and hold, like an investment. And I can also use it for passive income. My stocks, I cannot use it to buy and sell. So that's the main difference. The characteristics of these are different. Bitcoin this moment in time is at 25,950. Didn't you say we'd go higher? We did say we'd go higher, but BlackRock is like $1 trillion, and they have their eyes on Bitcoin, and because of that, they're putting a lot of money in, and they're looking to time it, so the market is going to go up and down in favor of the BlackRock. Ethereum, 15.6 to 34, XRP at 47, XRP high was $1.65 one, so you know when it goes low, it can go high again. XRP was cleared. It is not a security as Mr. Gary Gensler was hoping for it to be. Now we're hearing Mr. Gary Gensler on CNBC talking about how there's no non-disclosure on some of these crypto, that they're leveraged, and that investors got hurt. But what Mr. Gensler is not telling you is that there are 2,300 crypto, and not all 2,300 crypto are not doing the non-disclosure, not doing the leverage. I'm Tisha Powell, folks. Go ahead and hit that free like and that free subscribe button. Go ahead, friends and family and friends and folks, check out the Neiman Marcus products, tag products, and go ahead and just hit subscribe. It is for free, and that makes us bring you these stories. We love covering real estate, money news, and business news. I'm Tisha Powell. We'll see you another time.